Hello everyone, today is July 22nd. This is Sam Wong again. Hope you enjoyed the summer so far, even though it's very hot. Before I continue to talk about individual stock, just want to give you a perspective how the market looks. The stock market continued bullish this week, and Microsoft will be announcing earnings. As you can see that in the picture of Dow Jones Industrial Average, it was almost hitting the 52 weeks high again, and really investors digest the latest development to global trade negotiations, and also the tariffs, obviously, and also the Great Butterfly uh, uh, Butterfly Bill. So corporation also expected to be benefit from that. Which probably outweighed by tariffs. And at the moment, inflation is kind of considered under control, and job report continue to be stronger than anticipated. With all that saying, that kind of explained where we are seeing that the market is pushing again in this earnings seasons. You can see the Dow Jones again is almost reaching 52-week high, and Nasdaq, S&P 500, also reaching very soaring. As you can, if for those of you who have heard my previous video, you should know that some analysts predicted that the S&P 500 will go up to 6,600, and some really more aggressive saying by end of year will be hitting 7,000 this year. So there's still kind of room of 10% growing, which suggesting that individual stock per house may even go higher than the index. Now, I would like to share with you a specific stock that I will talk about for the time. For those of you who have listened from the beginning, thank you for your support. So, robots, if you were bought it last year, which is about $30 range, and even with the time you're doing the Liberation Day, and the stock has slipped, and you buy at that point, now you're hitting $120. And obviously, I kind of sold mine at $80, $90, and $100. So I don't have a lot of exposure for this stock anymore, but I bought it around $40. So, my return pretty much in this stock is like over 100% on this one, which is what I predict. Even though the stock continues to at a loss, they come up with their new strategy, and really have a game for pretty popular. And this is summer time, so there's a lot of people really playing the robots, and that's just making them increase the subscriber, which they're forecasting the future outlook that going to be more pleasant than in the past. The other stock is, I have talked about this one in United Airlines. You can go back and listen to my video. During around the Liberation Day, the stock really dropped around $60 from the record high of this year, $116. So again, I sold around 60 some dollars to at the time I bought at $40, which is actually 50% return less than a year time frame. So when the stock dropped to $60 during Liberation Day, I say it's a great opportunity to buy back. And I did buy some and then sold around $90, which is really at the point of high end for the last few days. So what you have to noted that at the time people were the market Wall Street were really being pessimistic about there will be reduction of travelers due to the economic recessions. People are not going to spend money going to different places, whatever. But as you can see, that the other stock also doing very well, CCL, which accrues that actually rise from $19 to $30 recently. So all these two stocks looking at relatively comparison around the time, using the Liberation Day as a mark to compare, which in less than 3 months, you actually make 50% return, which is way away to the market of indexes that give you like probably around 20% at this point from the Liberation Day. So the next stock I would like to talk about, this one is a little bit pullback, but it's an opportunity for me that I'm recommending you to buy. Again, this stock at one point was $75 as higher, and the IPO price was $14. And you can see that this year recently, not very long time ago, between mid-March time frame, it was actually around $24. So right now I think it's a good time to buy, and one of the justifications that electronic vehicle continue going to be the future. there will be more and more demand and just stabilize and people realize the good and the breakthrough innovations as they can really make the electronic vehicle last longer. It will make it even more competitive. So this same paint vehicle has been sold in Europe, in Mexico, and different places. So except obviously in U.S. because of the tariffs issues. Um, so in China as well, remember in 2025 this year, the projection will be 20 to 25% of all vehicles will be electronic in China. They do have built an infrastructure that really supporting them, which is what US lacks. So I think this stuff still have the opportunity. I look forward to the start if you push up with good sales result and continue, to reducing the loss. You probably reaching up. I'm looking short term will be hitting $22, so which is like quite a pretty good return. That's the next one I've talked about it, which I bought quite a bit as well, is ACLS. As NVIDIA review believed in the Liberation Day was dropped to $90, now coming back to a high $170 all-time high. So this is actually is a company semiconductor chips that providing pretty services along with company like NVIDIA. So I actually look forward to start again a year in. I'm projecting $100, but I bought it pretty low, so I'm just waiting a few more bucks like $80 will kind of reduce my exposure. But again, with $80, I still make like 20+% return, which is better than the index. The other stock that I want to talk about, which is BYD. This stock again, I will hold this one for a long term. So this one will not be something that I will buy and sell for short term because I see the potential. This stock again, if you look back at 5 years timeline or the maximum oldest state you have, this stock will actually $4 and got up to $100 today, which is really 25 times return. I remember I bought it in 11 years ago, and I make 10 times of this stock. Now, obviously, I don't have a lot of shares, but it's still a very remarkable stock that similar to Amazon that I picked it correctly years ago. And so I still see a lot of potential upside on this one. Of course, there's a variability as you see that you can up and go down and go up and go back down, and this is now look like it's maybe go back up to challenging the highest end again, but then you may potential tip down. Chinese stocks still continue to have a very high variability, but at the same time, you can see that their return is very attractive. There's some foreign investor going back to the Chinese market in Hong Kong. They actually doing quite a bit number of IPOs. So kind of having a very attractiveness and kind of pushback the Chinese and Hong Kong stock market again with some of these stock that really they have a pretty good potentials and they are making money. CATL is a good example that where the stock that recently entered the IPO and completed in Hong Kong successfully, the stock have actually gone, well, kind of came back down with the prices, but then now it's a lot higher than where it was started. So they still have a lot of growth and potential. And out of the and then the other one is HYLM, which I did not do pictures of it. Again, it was dropping down to $1.40 ranges, and now it's latest at $1.65. Go back and forth from $1.72. So it's really kind of going back and forth with this kind of range. However, taking the lesson of the last 2 quarters of earnings seasons, really every time before the earnings, the stock have skyrocketed by more than 25%, and then after earnings announcement, it dropped the next couple of days. Then we'll have a quick announcement coming back, signing new contracts, which actually boost the price back up again, and then eventually we will be probably because of those people who buy options and day trades. You push the market back down again into a much lower level. So there's a lot of the HIN is a pretty good stuff for short-term trading, for profitability, and in the long run, I still see this stock will have a very good potential to reach over the 52 weeks, actually not 55, 5-year high is $52. If they can reach the economic scale to produce what is needed to sell to the market. Um, all the seven macro are recommended by Apple. Why? If you will put all these into the chart like this, and you look at all these seven macros like Tesla, Microsoft, Netflix, you will realize that Meta. You realize that the stock actually, except Apple, the other stock is all upticking, and some of them even reach 52-week high. Apple actually did pretty well if you look at the chart. At one point was $260, but then is because of the sales reduction in China, because of the conflict and tension between geopolitical risks, and then then you get to the tariffs talks. You really driving the stock really coming back down with anticipation that you will have increased the cost of the business, therefore you will be less profitable. And then there's also the talk with Trump trying to get Apple manufacturing the plant moved back to US, and that's also creating another noise and causing the stock to even further come down. But if you look at Apple in the long run, right? You think about this is a very really have a very one of the best sellers of cell phone, and they actually have iPad, which is very popular. They also have the technology AI, which will continue to produce, and their phone, the camera features are actually very well and very easy, user friendly. So with all that having said, although the Apple Car did delay, now they're not launching that one. It would be probably because they do the cost and really realize it's not quite profitable, as a lot of EVs still not making money at this moment. So if you think about all these factors in, and with the market again, the momentum on the Mega 7 will actually uptake. I mean, although the stock have come quite a bit from $170, which is at this point Liberation Day, and you come back to 214 at this point. Well, you still have which you reaching back to the all-time highs. So I will still think there's a room to grow, especially if they're going to talk about the new phone that they're coming out and how they forecast in the futures. Profitability with and even innovation breakthrough using AI. Even despite the tariffs impact, I think the stock will really gonna be really good for this one. Will be, I think it still have a really good valuation right now to buy. Um, Again, in August, it is very tough. We all depend on whether Fed is going to lower interest rate. If they are lower interest rate by end of July, then I think you will be more you will continue. We have the momentum favorable to the stock market. Also, the one beautiful bill that will have a really some impact of the increased debt level of the U.S. And the spending, which means government spending, and also small business tax break, and also eventually you're also introducing a corporate tax break as well, which will be the quick catalyst for the stock market continuing to momentum. But what you have to watch for is the fourth quarter, that at the second quarter, or even at the beginning of the year, some analysts already forecast that there will be weakening of fourth quarter due to the government layoff, and a lot of corporations right now downsizing as well. So I'm going to leave you with that. Hopefully, the market will continue momentum, driving it and soaring into another 52 weeks high. And make sure you have a wonderful weekends, and also be happy and healthy. Thank you very much.